And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, July 7th, 2021. Market continues to follow current analysis fairly accurately, although it does appear we had a little bit of a hiccup today in what I was not actually expecting in this particular position of where we are. And what that can suggest is that if you remember that I placed, these are sub waves. And we had done 3, labeled it 4, put the 4 in place yesterday, and the market started to rally. And my assumption was that it was starting to rally within a triple sub 5th wave up, which should move to new highs. So when it got close, by getting up to 43, 47 and a half, then it tripped up and it dropped fairly dramatically early this morning in the session. But then it picked it up and it continued to rally and did eventually get to new highs at 43.50 through 25. Now, that's not a whole lot more than what I was looking for. I kind of was hoping it could get itself up towards 53.58 into this area, maybe even a little higher to complete the 5th. So what it may be doing, and that's why we got this in between, because that actually negated further upside and then it did it anyway. So I'm believing that what we likely had is A, and now we've got the B, and now a C, or something into that effect that we're still within this corrective phase. And then maybe that's not the end of 4, as we marked yesterday, and it may be pushed out. But I have to allow for a continuation, and there is now the possibility that this triple sub wave 5 did complete at that high. Maybe we'll go up a little bit higher in globex, yet to be seen. And then I'll have to figure this anomaly right into the count. But it can still absolutely work. In fact, this could be 1, and then we get A, B, C for a 3rd. You know, that because we're in this 5th, that it starts to triangle, sort of just wedge its way higher till we get up into these areas. The rally is basically continue after market, and we have globex opening in about an hour. So that should give us more clues as to what it's going to do. But for right now, I'm leaving the labeling as it is, allowing the market to fulfill what it needs to do or what it's going to be telling me it is doing. So we have resistance again above at 43.57, 43.65, and 43.80. This zone is, I'm thinking this lower zone is likely going to complete this 5th wave. We get another pullback, which is likely going to come back into this area. And then we rally in a, well, actually, when we get up there, this completes the 5th and then completes the subminute wave 3. Then we get another wave 4 correction, and I'd be expecting that wherever this ends up, I'm still expecting it to come right into this level. So whether I have to put a 5 there and then we get this larger 4 now, I still would expect it to come back into this previous 4th wave and then produce a subminute wave 5. And that's the one I'm thinking gets us up into these upper reaches. So, and then again, once I get the mark on wave 3 and I get a wave 4, we'll add one more layer to this upper level as to where that wave 5 would be expected to go. So for tomorrow, either we get a continuation, it comes up, and then I can mark it as complete. I can mark the 3rd as complete. And then we get a 4th wave, again, dipping back down into here. Once it is complete and I can label it, I can put retracement levels in to give us a clue as to how deep it may come. Right now, we're going to continue to think that it's likely going to come within this zone. And then we have support here at 43.05, but we also have support via the 200 moving average. And then we have additional support below at 42.88. What it can't do, if it's going to be the 4th wave of subminute level, it cannot break below 42.58. So that's the no break zone. and everything up inside of it is free game. You know, it's all up. It can go into that area and still rally up to new highs, and because we would consider it a fourth wave off of this third, which is yet to be completed. So again, the situation is we may have to put that 3 here. So it'd be a 5 and then a 3 above it. And then we get the fourth wave. And then that would definitely suggest we're going to get back down into these levels. So because the fourth wave that we're looking to finish is then going to be all the way from there up to here, wherever this tops. If it's there, then that's where that line would be drawn. And it's going to be correcting 230 points. So 40%, 90 point drop, just back here. So that's the situation. I continue to find it interesting that we are holding to within the analysis, within the Fibonacci, and within moving averages, how they're going. And that continues to just lend support to that the count is correct and that these levels will come into play. So I'm expecting a little bit higher. If I have to, we will label that the current high, but we're finishing the day right underneath it. So the session is now, we're going to wait for globex, but it got up to 52.25. And that does sit right below, a point below. So it's not going to take much to get up to these, a new additional high, put a completion point in there, and then start the next corrective move. So a little bit higher, correction back down, and then we get a more sustainable, stronger rally up to additional new highs up into these zones. That's what I'm going to leave for right now. The next update will be Thursday, the 8th of July.